The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour. I'd like just to quickly start off with a couple of chart patterns that we're looking at. You see this chart pattern on the right here. This is the 10-minute RTY M19. This is the IWM Russell 2000. This is the futures that we are looking at right now. It's trading at 1570.90, down 670. There's this uppercase A. I talk about this, it's called the single leg A syndrome in the Chapman wave methodology. If it gives back a certain percentage, there's a good chance it's not only going to give back a certain percentage, but it's going to take out the left side low. Look at that 10-minute chart. The 2-minute made a beautiful peak. It just kept going up and up at a certain point this morning, just after the bell, made it low, down to the 15. I think it was about 74, 5 area, and then it runs all the way to 1592, round number high, peak D, and then it comes pulling back. What is a peak D? Let me just quickly do this because this is going to be almost like a Tactical Friday session. Let me just show you if I can get to it right here. Not that one. So in the Chapman wave methodology, we're always looking for the lowest, most obvious low bar to be able to start a buy signal. They can go to a buy mode with certain technical conditions, but all I'm anticipating is uppercase A, B, C, D, 4 higher peaks. It can go E, F, G, but at D, when you've gone from a buy signal to an upgraded buy mode, D is your anticipated level that we're looking at, the next high that is of importance, the fourth highest high. And at that stage, other things can happen. Yeah, it can recycle, but that's really the goal. These are the patterns we look for all the time, the arch and the cup formation. Those arches can become a lowercase h. We've seen that all day. That's the reason why I want to bring it up as a lesson. So the lowercase h means that the left side low was taken out and it can keep going down. And on the right, the left side high is taken out, and there's certain conditions that make it really positive, or it becomes a double top. We're out of this now. Let's go to the nitty-gritty. Look at all these H's right here. Now we're trying to form this rectangle formation. They could form some kind of a cup formation, or maybe a bowl. ESH, ESM, 19, that's the E-mini. Look, is also trying desperately. That made a peak E in the 2-minute chart. All right, enough with that. I wanted to show the patterns to be able to relate it to what we're looking at. Look at the dollar. Look at these beautiful cup formations. In the dollar, you've got, whoa, where did that go? Okay, right there on the left, you've got a couple of cups that made higher highs and then pull back. And you've had a beautiful stair-step move. The dollar's right now up 11 cents at 97.80. This is really important because the dollar, I think, is essentially looking at two aspects. It is looking at the U.S. economy, and it's looking internationally at the currency of credit. This is the currency that is the currency with currency. It is the premier currency, and that's why it's doing well. Could change, but at this particular point, daily, weekly, monthly charts are all looking really good. It's going to take a smash to the downside with the dollar perhaps dipping underneath 94. The 94s, a close under the 94 says, whoa, you've got something completely different. The euro will be soaring at that time, maybe gold as well. But until then, this is really good action. Now let's go to the nitty-gritties. INDU, look, same patterns we've been talking about. You've got your cup formations. Look at this right here. Beautiful double top. That's exactly that inverted Y formation that we were looking at. Let me just do this so you can go apples to apples. So look what happened. Let's go right. I don't have it anymore. All right. Well, there's that inverted Y, the lowercase h upside down. Tested the 26,241 level by going to 26,487, 46 points higher. Couldn't quite hold it. It pulled back with a little doji candle, held support, made a little cup for like a cup and handle, and then rallied sharply to 26,695. And now it's making the arch formation. And that downtrend that I showed subscribers to my opening call says that that is support that is held so far. And then it's got like a left side, right side price time match, and it says that by the 8th of May, what is today? It's 2nd. So by the end of the week, no, by Tuesday or so, a Monday or Tuesday, we should be testing 26,060. It doesn't mean to say it's going to happen, but this is a best case scenario based on the technicals. And look, the MACD finally turned down, and the stochastic finally got out of the 90% area. It's trading at 68%. That's showing weakness, not huge weakness, but weakness. And finally, that weekly chart is saying really good chance by next week we've made a peak E with no new recovery high above 26,695 in the weekly chart. Time for a rest, that's all. It's very important. Let's look at the S&P. I'm going to do them all because I was asked, could I be very thorough in the analysis today because it's such an important moment. But well, I shouldn't say that. I'm thinking about how important it is. Why? Because we've just made a D. Remember in the Chapman wave, I just showed you Ds where other things can happen? Not only that, I didn't want to get into the technicals. Remember, I think it was 2 days ago, I was saying there's a pattern here that's called the Chapman wave, unconventional flat base restart, big words, but the whole thing, that explains the entire thing. Let me do it now. What it says, you've got this pattern which had a very quick peak D, pullback, and then a new leg to the upside. That essentially becomes an E/A. But then it pulled back and it went deeper than the trough after D. But because it made the Chapman wave instant restart, there's a technique I developed years ago that said, be careful, because if we continue higher but keep coming back to the high of either D or E, it's telling us that not only do you have what I call a flat base restart, where over the next couple of bars after D, you get kind of testing of that level, which you have broken in 3 bars above the peak D, and it makes the low kind of important. If there is a lower low, that's an unconventional flat base restart. And that says, not only do you have an instant restart, but there's a real good chance when you get to a D or an E, usually it's an E, but I'm always looking for it at a D. There could be a pullback that takes you right underneath the oval pattern high. In this case, it's the high of 2918.00 made on the 17th. We just did that today. So I didn't have to, did I do it in the SPY? I know I did this in one of the, no, I didn't. It was another, I should have written it. I think I did write it down. I can't find it. So let's go back to the SPX.X. Here we go. S&P 500, 2949.52 was the high yesterday. Intraday, very sharp reversal. First ugly, really ugly candle that we've had in a very long time, since I think early March, mid-March. Now look at this. We're under the 14. We're under the black lines of 14. The 9 period is the green line. We're decisively under that. So if there is a takeout of this low of the 18th of April, 2891.90, doesn't have to be a close, just has to take it out. It says be careful, because if this is a more concerted buy a sell signal that goes to a sell mode, you could get a 1-to-1 to the downside, which will take you to the 2862, 2858 area. I'll be right back.
The TAS Profile Scanner is the most revolutionary piece of trading software that you will ever try. Wouldn't you like to approach the markets with confidence? As you begin your trading day, it's likely that you'll be faced with lots of decisions. In order to make the best decision, the first thing you'll need is a strategy that will help you minimize your risks. Whether we're in a bull or bear market, a good strategy is to have the tools needed to help you scan and analyze the markets before you trade. The TAS Profile Scanner instantly scans and filters over 2,500 global financial markets, such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, president of TAS Market Profile, the TAS Profile Scanner understands that in today's technological world, the use of top-flight software applications, automated trading algorithms, and technical analysis expertise is essential to successful trading in today's market. Whether you're looking at the trade matrix, the ETF heat grid, the market breadth, the landscape charts, or the many other features of the TAS Profile Scanner, this is a piece of software that will revolutionize how you look at the markets and set up your trades. The team at TAS has even put together a 12-part video series to walk you through every aspect of the TAS Profile Scanner, which you can find directly on the TAS order page at TFNN.com. Sign up now for only $97 a month with a risk-free 30-day trial, so you have nothing to lose and everything to gain. See for yourself how you can harness the full power of the TAS Profile Scanner by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services section. Remember, with a 30-day money-back guarantee, you have nothing to lose. Don't let another day pass you by without trying out this amazing piece of software that will revolutionize how you look at the market and how you place trades. Sign up today.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Hi folks, we're back. Dow's down 220, S&P's down 18.5. So, okay, gold down 11.6. What's really important is we're just looking at patterns. So what is the pattern that is predominant? And this is what I've been talking about. This is what I drew in ages ago. This big arch formation. Look at this. Look at that. Look at that arch formation. Left side, right side price. Time matches 1249s. Could be hit. Is that it? All right. 1249. Yeah. 1249 low of this, the week of December the 14th, 2018. If gold takes out today's low of 1267.3, what did we? Today's Thursday, right? By Friday's close, if the Dow is if the gold is down under 1270, I would not be surprised if by the second week of May, going into the second week of May, that's next week, there's a test of the 1260 to 1247, to 1250 area. So that's really what I'm looking at. What'll save the day is that the MACD is actually a little bit better than it should be under these conditions. And the stochastic is way above where it was on the last low of the 23rd of April, when gold had made a low of 1267.9. Remember, I was talking that day and I said, if the weekly chart breaks 1268, that's not going to be a good sign because there's a trend line. I'll show you that in a moment. So what we've done is we've arched over, went to the 200-period moving average around about 1290. Now we're at 1272. Big deal, 18 points. It's really not a big deal. What is a big deal is that you're making lower lows and lower highs, but this time, instead of 1267.9, remember this is a continuous contract, so the dates are exact. And the price is, the chart pattern itself is exactly right. But the price changes because it gets smoothed out. So we're looking at a new low at a leg G to the downside, which could have recycled to a, whoa, did I miss one right there? I think I did. A low of 12 12.75.5, 12.75.2. No, I didn't. I thought I went through this carefully. Leg G to the downside, G/C, let's call it, right? So in the meantime, back at the ranch, this has held, it's gone below, and the slow far today is held in the arch formation. So what am I looking for? Anytime it goes below 12.67, I think you start to look at the 12.50s as the next target. That's number one. Number two is, here's this up channel that I was looking at right here. It's called the Chapman Wave Inside Track, a little mini up channel. Doesn't have to be a full up channel. This one is an expanding wedge formation. And that was the red line, is the dashed red line says you've gone below the Chapman Wave Inside Track propellant support line. But the week is not even close to being done. We've got Friday to come. Anything can happen between now and Friday. It is leg C to the downside. The MACD is very poor. Stochastics at 11% and showing no sign of strength. My suspicion is gold has limited upside right now, and there might have to be more testing. I wouldn't just say, oh man, gold, it's all done, it's finished, etc. What I would say is it's part of the smorgasbord of different aspects. Think of it as a chessboard. Look, you've got silver. Silver had a really ugly session yesterday, continuing that ugly session. That can't be, that's a recycled leg D to the downside, B in the weekly, and that weekly chart has broken every level of support. MACD is bad, stochastics flat at 11%, monthly chart is bad. I suspect gold could bounce to the 1480s, but that it's got a destiny with a 14.50 big test of support. If I look at the dollar, just the fact that it's rallying is fine. I'm not interested. I'm very impressed at the weekly having gone below the 9-period moving average, the green line, and above the black line, which is the 14-period moving average. I'm very impressed that the MACD is still very strong. I'm very impressed that the stochastics moved up to 84% in the weekly chart. I'm very impressed that the monthly chart starting May has made a leg C candle for April, and now May has the challenge of breaking, even just doesn't have to close, just has to go to 98.34, and it says May has extended leg C in the monthly chart. But this is what I'm looking at. If you're looking at a lot of fear unfolding now about China, who knows? This is exactly, when you're getting your peaks in your sell signals that we've been getting from my subscribers over the last week in the different indices, we don't know about the news. Everything was looking fantastic. Look, when Advanced Micro Devices came out with the fantastic earnings on Wednesday afternoon, together with Apple saying everything is amazing and we're going to buy back trillions and trillions of dollars of stock. We've got this. We've really got a save here. Everything looks fantastic. When the market, after the Fed, started to rally, it looked like, oh my God, the shorts are just going to once again, not once again, 10 times again, maybe all this year. It's been every other 4 days, there've been new recovery highs in many of the indices. So I'm looking at this and I'm saying, I love the dollar, what it's doing. But if there becomes, let's say the XLF starts to pull back sharply, it's down a little bit today, down 3 cents, big deal, 27.75, making a potential peak E, which I think is going to be consolidation. But let's just say the financials suddenly see 26.50, $1.25 down from here. I would think that there'd be a currency of fear, which would translate into maybe for the first time in a while, people looking at gold as some kind of a hedge. That's what I wanted to say. So I'm looking at this, I'm saying, you cannot take your hands off the wheel to pat yourself on the back. That's when you hit the tree. But at the same time, things are working out okay, but be ready, because at any point you could get the surprise. You won't get the surprise if gold suddenly starts trading at 12.65, because I think the surprise will be for the gold bulls that it goes down. But if this turns around by tomorrow and all of a sudden Tuesday, you're looking at gold at 12.87, 12.92, or for whatever reason, I don't know what, that'll be a big turn of events, but I don't see that right now. So now let's do something else. What I want you to look at is crude oil, which has been kind of a terrific bellwether for us, because I've been saying that if oil moves higher, I like that. I don't want to go too high, but up in the 63, even 65, 66 area, that's fine. It is 66.60 on the continuous contract on the 23rd of April. Now it's pulling back in leg B to the downside, having made a peak F top. There's that rectangle I said, you've got to be careful. You can go in and out of this, but if you start closing below or above, that says be careful because the trend could change. The trend has changed together with the market. Leg C at the 200 period moving average, I'm pretty sure it's going to be a peak C. MACD and stochastic in the weekly charts are still good. I suspect that that crude oil trading at 61.45 down 2.14, one of the biggest hits it's taken. It actually took one just 5 days ago, but it didn't close so badly. This one is really a little bit bigger. It's saying there's a lot of selling pressure in crude oil. We'll be back. I want to talk now about bonds.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi everyone, so you can see the RTY, the Russell 2000 has gone to a leg C. It's just gone to the 2 minutes, gone to a leg D. Let's see what the E-mini is doing here. ESM, that's also trying to get to a D, but it's in this lower rectangle formation. So we're going to be watching that. Okay, let's get to the nitty-gritties here. We're looking at the TLT. The TLT, now this is a little, I should not be surprised because it's happened here many times before this year. In other periods, for years and years, it didn't work this way, but it has happened recently. And that is the TL. My contention has been that when the market is really weak, it becomes volatile. You know what volatile means in the vernacular of Wall Street? It means down. All right, you're whipping, but you're whipping down. There's no expression for volatile on the upside. Just sanguine, I guess is the word. Okay, so the volatility usually means for me that money comes out, it migrates from the risk involved in the equities and the stocks, and it goes to the so-called safety of bonds, right? But we haven't seen the look of this. The Dow and the S&P are down 0.7 and 0.5%. But wait a minute, TLT is down 0.5%. So it says to me something's going on in the interest rate sector. And I believe that when I spoke about this, I think at TNX, I think I spoke about this either yesterday or the day before. And what I was saying is that I still think that yields are going to remain fairly low, stuck in this range for now. That might mean that the normalcy is a little different. There's an aberration of the normalcy, and that we're now seeing other pressure put on yields, not the dollar. They keep talking about the dollar, but it's really yields that I think they want to keep it, whoever they is, they want to keep it down. That's my impression. So the yield has popped up a little bit at 25.40 and up 0.38, but I think it's in the range and below 27 and above 23 and a half. Hey, who's going to complain? That's not bad. Okay, that's enough with the yields. I want you to go to the IYT, which is the Russell 2000, sorry, the iShares Dow Jones Transportation Average Index Fund, trading up $1.43. It actually hit 194.89 this morning. I like this. We are long. We're taking a little bit off, but we are long from the 186s area, and I think we're going to be taken out at some point. I don't see how the transports can hold up all that well when the market is under duress. XAL, which is the airline index, just chop, 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 has gone to a peak C or leg C. It's just really sideways action, down 6 cents at 103.26. What is something like a CSX doing? CSX, got a lot of questions lining up. Gone to a peak C. It's really a double top, peak C1 and peak C2. So it acts like a D, so it could pull back. And a leg E, a peak E already in the weekly chart, and a spectacular move to all-time highs in the 80 area, between 81 and 80. So this is, it can have why shouldn't it have a little bit of a rest right here? All right, that's CSX core rails. Now let's do something else. A couple of questions have come in. Well, one question I've had is, Basil, wondering if you have ever tried to automate your program and sell it, or is it just too complicated? So the question is a really good question. It's a question I've asked myself for maybe 20, 30 years. I've tried to do that. I've had people do it. I had one person who was doing a fantastic job, but there was still issues that I had, not he had, but I had in those alternate counts, which I've really been working hard. It's one of the reasons why I like to trade the RTY M19, the Russell 2000 futures, because they trade so differently to the E-mini and the Dow. It's almost like it's a challenge of seeing in the one side that the Dow futures, like yesterday, were going up, they're going down, and yet the Russell was actually rallying yesterday very nicely. It's practicing as much as possible to divorce yourself from other things and only be technical. I'm trying to do that. I've just started over the period of every couple of months. I sit down and I start articulating my technique. But look at this. When you get something like the QQQ, where did it go? The QQQ. 1, 2, 3. Right there. That gives a peak right here. I had a little trouble with this. And if I'm having trouble, then I don't see why a program wouldn't have trouble. I think there was a peak D right there, and it pulled back at 174.65, I think it was. Let me just show you exactly where it was, right there. Yeah, 175.79 on the 4th of March. And then it pulls back exactly like it should, the deepest correction after a D. The MACD turns down, stochastic plummets, and then turns up, and then you get another move, peak A, E/A, F/B, going to 182.83 on the 21st of, whoops, no. Yeah, the 21st of March. So now here's the issue. Is this a brand new leg B or is this an F? This is a residual, it's like a rogue wave, it's like a coda phase. Well, it went to the peak F and then it pulled back, but it didn't break anywhere close to the 169.34 low. It went to 170.60. So in articulating this, any program that I would write, it would just be so, it would be way too difficult. So what I did was, I call this a peak F with a little hat, that inverted V-shaped pattern, which says after you get a down arrow, you could get a new high, but unless it's a recycle to a new buy mode, put that little inverted V-shaped pattern because it says that really is the top, and that's what I treated it as. And then you get the peak A, B, C, D with yet another chance of a Chapman wave instant restart. But when you're this high after all these, to get a restart here would have been almost, I've hardly ever seen that. So I treated it as a D going to an E, and that gave that top. And 191, it's just incredible how this happens. 191.32 was the high on the 29th of April. And what do you think yesterday's high was? 191.32. Have you heard that number before? Yeah, 2 days before it did that. That is so unusual. So there's your double top. That's number one. Number two is, oh, did I write it down or did I just, oh, man. Did I write it down? Oh, was it Apple? Let me just check. Apple? No. Oh, man, I just got so many notes. I can't keep up with all this stuff. So there were round number highs yesterday. Oh, Qualcomm. Let me just see. No, it couldn't have been Qualcomm. No, Qualcomm's in leg C. Oh, I can't remember now. What a pity. AMD, was it AMD? Advanced Micro Devices? Nope. It's up today, up 1.31. Look at that rectangle formation. We'll see what happens with those SMHs. All right, I can't remember. I'll try to do it for tomorrow. I don't know how I'm going to go to do it because I looked at so many charts earlier in the day today, preparing for an interview. So I had to go through all these different things. All right, so round numbers are very important. Now, I had a number of stocks that made round number opens, made a slightly higher high, and then pulled back very sharply. Wow, look at the time flying. Look at all those questions. I'll deal with a bunch of questions when we come back. You can tell my bias for subscribers is to say that we're in a consolidation phase. That's all I can say. I'll be right back. Dow is down. 192, S&P is down.
If you're in the CD market and looking for a secure investment, the Tiger First Mortgage Program may work for you. The security for these first mortgages are building lots in the tax opportunity zone in St. Petersburg, Florida. The Tax Act of 2018 set up tax-free zones across the country where you can build and hold for 10 years and pay no tax on the profits, which makes these lots valuable. The investment is anywhere from $30,000 to $75,000. The interest paid is 7% yearly, paid on a monthly basis. According to Bankrate.com, the best rate for a 4-year CD in the country as of February 20th is 3.1%. A $50,000 investment at a normal 4-year CD rate of 3.1% would give you income of $1,550 per year or $6,200 over the 4-year period. That same $50,000 investment in the Tiger First Mortgage Program would give you $3,500 per year or $14,000 over the 4 years. Which would you prefer, $6,200 or $14,000 of interest on your investment? If you would like more information about the Tiger First Mortgage Program, you can call me at 877-518-9190. That's 877-518-9190.
It's amazing to think that Tom O'Brien started his weekly gold report 17 years ago with the first issue published April 7th, 2002, when gold was trading at under $300 per ounce. Gold peaked at more than $1,900 in 2011, and after spending many years consolidating at lower prices, gold may be poised for its next big run. Tom O'Brien publishes his weekly gold report every Monday morning for subscribers, consisting of coverage of the XAU, HUI, GDX, the dollar, bonds, South African rand, as well as 25 different mining equities with specific buy-sell recommendations. As of April 1st of this year, the gold report currently
currently has 8 active positions with an average unrealized profit of almost 8% for each open trade. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your Gold Report subscription today, visit the front page of TFNN.com. Don't let gold's next big run pass you by. Sign up today.
Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
So I had a question, calling question, couldn't stay online. Tesla Motors, TSLA trading up 9 at 243. The question is, my thoughts. So my thoughts are this. Number one, there are going to be a lot of people that would be very, very upset if Tesla went insolvent, because big money has gone into those cars. And not only that, even the smaller ones, which I just see all over the show around now, they're not so cheap, because when you finally get it, you want to add this, you want to add that, and in the end, your $35,000 car really picks up a lot. In fact, it could be way more than a third more than that. I don't know what the average price is. I'm going to try to find out one of these days. That's number one. Number two is, within the context of Tesla as a company, that's a little complex for me, because there's a bond. But my thinking for years now is that basically Tesla has been losing a lot of money on every car they sell. That's if you put it into the capitalization of what does it cost to make the car? What do you get for the car? And what's the difference between our overheads? Just basic bookkeeping, left side, right side, okay? However, this is going to be very important. If I was looking at just the chart formation, and I always say this, I would personally not be able to short Tesla. I should have taken put options when Dave White was talking about it very brilliantly, great assessment of it. And he was looking at the downside. I believe he has really a fabulous gain on the short side. But my thinking here is that I couldn't handle those news reports that just keep spiking the stock up, and the next thing say makes higher highs and higher lows. So lower highs and lower lows, but boy, those spikes can really do damage to your psyche. So that was out the question. But my target has always been, even though it was up in the 340s and the 300s at a high of just about 380, my target has been to see, my target has been the 200-period moving average of 275 in the weekly chart, but the major uptrend line, and now I'm going to show you this on the chart, look at that. This major, I'm going to just it's changed a little bit. No, that's exactly right. Which went from the lows around about October of 2012. Gee, they've been around so long. Who would have thunk? And then the low that was made, major low, February of 2016 at 141. That low was taken out just at the end of last month, and now we're trading under it. And I talked about it as being, my target as being 220 to 198. If I had to ignore all the news, and now I think people are getting tired of all this other stuff that's going on, they're looking at the price and saying, what are you doing for me now? So that's my bigger target is that. Short term, I can see a bounce. It's at 242, 265 is the 9-period exponential moving average. 273 is the 200 period moving average. I think it bounces less than that. I think it bounces maybe to, it's at 242. I could see 252, 254, and then it does the retest. On the retest, if it closes any day below 230, I think a lot more sellers are going to come in. So as a bounce, you could trade it as a bounce. I would not. I'd actually either stay away, I'd be looking for it, one more big move to the downside, and then I'd say, okay, now there should be a really good relief rally, and then it's on its own, because I have to tell you something. Tesla, if they're under pressure financially, a lot has to happen. So we've got a caller. Oh, do we have a caller online? Oh, we've got Brent in Martinez, California. Brent, how are you?
Hey, Basil, how are you?
I'm well, thank you. What would you like? I haven't heard from you for a while. I hope you're well.
Oh, I'm doing very good. How about yourself?
Very good, thank you. What would you like to look at?
I wasn't going to take a lot of time when you were trying to figure out the one that had the round number. I think that was McDonald's at 200 that you were talking about.
Yeah, I've got that right. No, it wasn't. That was McDonald's 200 round number. I think I spoke about it a couple of days ago, but what I was looking at was some really key turnaround stocks that had round numbers at the open, which you can't see. This is what I call the phantom round number, and then it went intraday to a slightly higher number, and then dropped sharply. I'll find them. They're somewhere out there. They're the latest earnings stocks. So 200 is the round number on McDonald's. Peak G pulls back. I put the down arrow already yesterday, I think it was, because the MACD had already turned. McDonald's MACD isn't that good. McDonald's trading at 193.58, down 61, went under the 9-period moving average yesterday, closed under the 14-period moving average, and today it's trading well under the 14-period moving average. MACD's negative, stochastics now at 71%. Leg E in the weekly chart, which is still very strong, and the monthly chart is in leg D. So you had a question? Or you just
good job spotting that one, Basil. That was definitely has the potential of being a decent short. Of course, would have been if you had caught that high. So that's all I was calling you about. Great to talk with you. Have a wonderful weekend, and I didn't want to interrupt what you were talking about. So take care. Right?
Yakety yak, you can interrupt anytime. Thanks so much, Brent. I hope I find those charts. It's fascinating at those round numbers. It's like what I call the doji candle. If you get a silent doji, that means it happens a day before or a day after the significant potential high is being made. Watch it, because that could be your silent turnaround candle. So, okay, Brent, thank you so much for calling. I appreciate it.
All right, take care, Basil.
So Brent did bring up McDonald's. I see McDonald's, the big test will be the weekly 9-period moving average right there, the green line in the middle there. So it's daily, weekly, monthly. In the middle is the weekly, and at 191, if McDonald's closes any week under 191, that will start to see some deterioration in the technicals. But so far, those technicals are suggesting very strongly that McDonald's should find good support between 190 and 188, the 14-period exponential moving average. But if when it gets there, the MACD has crossed negative, I don't think it's going to take more than that. And the stochastic at 94%, which is really strong, the weekly, goes down under 80%, that'll be a signal to say, oops, be careful. But I think McDonald's still is in the category of the buy. What, other than high tech, what do you buy? Well, you want to buy some of these stocks that have acted really well against the backdrop of the strong dollar and international. McDonald's is fighting every one of those beautifully. So I do like it, but on a very short-term basis, I see it going lower. That was that. Next question, and let me get to the question I had right here, which was at the beginning of the show, and I said I'd get to it. I'm going to do this really quickly. Maybe I can do a little more tomorrow. So the question was from Peaky and the Den. Oh boy, am I going to find that? Yes, REITs. Stag, which is the best chart to buy in your estimation? Stag, MNR, WPC. Let's do that in order. STAG, Stag, which is Stag Industrial Inc., a REIT. This is a really good-looking chart on the monthly. The weekly is just in a digestive phase, but very strong leg. Peak B, I think it's going to go. It's at 29.23, down 22 cents right now. STAG is the symbol. I like it, so let's put it in a like category. good strong stock, I prefer to give it just a little bit more downward move, or buy it on a rally. So I do like it, yes. Let's see the next one, which is MNR, whatever that is. That is trading at 13.72, down 30 cents. I'll be right back. Dow's down 190.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools, as well as provide great market calls too. Sign up today.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com.
Hi, folks. This is Steve Rhodes. Stay tuned for another great hour of the Trader's Edge, heard here at TFNN.com.
So I'm going to write this down. We'll do a little work on this as Technical Fridays tomorrow. This is WPC is actually the best one. It's at all-time highs. You always want to go. Stocks that make all-time highs have a tendency, if you look at the list on IBD or anywhere, Wall Street Journal, whatever it is, on new highs, you'll find that the new highs seem to come. The same stocks keep making new highs. So stocks that make new highs continue to make new highs until they change direction, and stocks that make new lows continue to make new lows until they change direction. So this is still one of the better ones here. I like them. I think you've got a good eye. You picked some good ones. I'll choose one that I think is the newest one. I think the newest one that I would consider, in your case, because you're looking longer term, will be the one that I did. Which one was that? Let me just do that quickly. Can't find it. Oh. Stag MNRWC. MNR. Yeah, that's the one. If it has to break, it's just bumping and bumping and bumping in the weekly up against a 13.90s resistance. I think this is the one that has the most potential percentage-wise because it's a low-price stock. But I'll do a little more work tomorrow. This is the one I favor in your case because I think 13 is really good support. It's been there for months. 13 is held. And if it breaks out, this is brand new, then it starts to tackle the ugly candle of the week of the 11th, of the 30th of November. Just real quickly, let me see what we wanted to do here. Oh man, a lot of calls. I'll try to get to these questions. I think I've actually covered them. Oh, XRT I haven't done. XRT is the retail index. Finally, oh, look at this. XRT is the retail index, and look, it's stuck. Has the same chart pattern as the one we were looking at, M&R, but it has above the 200-period moving average. Let's see what RTH is. That's the one I do the most work on. I like RTH, the Van Eck Vectors Retail. That's my favorite out of the ETFs. Yeah, this is going to be very important. What happens over the coming 3 weeks? In fact, all of May, going to the first week of June. What happens to the XRT? Hey, folks, this is the end of the show. Stay tuned. You've got Steve coming up. Check out my opening call. It's my daily newsletter, very comprehensive. We've taken on some big challenges here, and so far they're working, but the day is young. We never know. Not everything works out, but let's see if this does. Have a wonderful day. I'll speak to you tomorrow, and yeah, interesting session.